it's my business. I actively trade this. Because if you're an active trader with stocks, you can get around a lot of rules because it's a business. You're just running things through your business. And DeFi for you is I run it as a business because I kind of consider it like part of what I'm doing for estate planning. I'm learning how this works.
Yeah.
I'm going to do it. And right now, if you're going to do it, I would try to just say, well, I invested this much money at the end of the year. I put, $50,000 into my DeFi. After all said and done, at the end of the year, I now have $70,000. So I had a $20,000 gain. And then just, put it through versus trying to go, well, when you're DeFiing, is it buying, selling stock constantly? Is that what it's doing? And so these are dividends. And then you now have this problem with your crypto constantly being bought and sold without you really controlling it.
So I did while you guys were doing this, I did research on the infallible Grok because obviously AI is always right. But right now, so again, what I was referring to is the potential of the wash sale rule being applied to trading crypto.
Yeah.
But right now, that doesn't apply.
Yep.
So right now, basically, you have two different whether you're getting airdrops, whether you're getting staking yield, whether you're getting DeFi, income, all of that is taxed at ordinary income rates.
Okay.
If you sell your coin, right? So actually, let me go back to make sure I'm.
And that should fall under either short or long term capital.
Trade or swap tokens earned from DeFi. And it says trading a reward token for another crypto or USD, you trigger a capital gains tax event.
Mm.
Short-term capital gains is held less than 1 year. Long-term capital gains is held greater than 1 year.
Gotcha.
So one of the things that I think is going to be problematic about that, right, or that maybe people don't. Again, this is my first perusal of this, so I'll dive deeper by next week's show. But here's the challenge with that. So let's just say you get, I don't know, because when you get, I assume you get paid your yield in the same token.
Here, I think I know where you're going with this, and I'll summarize it, and let me know if this is what you mean.
Yeah.
So me and DeFi, I'm earning yield. So say that I'm on Uniswap, and I'm doing an Arrow USDC pool, and it's paying me out in both USDC and Arrow. So I'm earning that. And that's a certain amount, dollar, wise. Say that, I collect that is income. Now, Arrow takes a dump at the end of the year, and I have to pay taxes on that, but I have to claim the dollar value when I harvested that yield. So that difference, might be substantial. I mean, like if Arrow dumps by half, and that was I earned $40,000 over the year. And it, dips, 50%, I still have to pay that full amount, not the new amount, correct?
Well, no. So I think yes and no. I think what I'm trying to say is, so let me make sure I understand this correctly. And who's going to be my guinea pig and just set my account up for me? I'm ADHD. You can't expect me to actually do this. Like
I have offered to help you multiple times to get set up.
Here's what I'm saying. So whatever coin you're doing really well in right now, I don't Plume, whatever, right? If you earn yield as Plume, so let's say for argument's sake, the yield. My understanding is the yield. Let's say you earn, I don't know, 10 Plume coins or some shit, or it doesn't matter. 10 Milt coins that I just invented, and they're each $1.
Yeah.
You have, I believe the way I'm reading the research is, that's considered $10 worth of income.
Exactly.
Right then, to what you're saying. But then, though, let's say Plume doubles, right? Mm-hmm. And then you say, I'm going to trade the USD to give me some cash, or to then get cash or whatever, right? So so it doubles, you trade the USD. There's also the gain from 10 to 20. You're going to pay short-term capital gains on that if you do it this year.
So you got to pay income tax on the initial 10.
And so what I think is concerning to me, considering how complex, and again, I'm not saying it's a bad thing, but because what I see people, what you guys talk about, is like, oh, I had this coin and I did this over here, and then